Attention all you New Yorkers. Excuse me, taxi.
Okay, man, we're looking around.
This is the 77 WABC minicast.
It's the Larry Kudlow Show. Free market prosperity starts here. Now, here's Larry Kudlow.
So, let's concern ourselves with more positive things, I hope, as in the economy, where business seems to be strong, profits are strong, stock markets are strong, energy's coming down. I guess it's going to be a good story as the year goes on. Not everybody agrees. People are worried about inflation. Some people want to see higher interest rates. Donald Trump is not one of them. I don't think Kevin Warsh is either. But let's talk to our experts. We got John Carney, Breitbart News editor for economics and finance and co-author of the daily Breitbart Business Digest must read, and Michael Faulkender, former Deputy Secretary of the Treasury and the economic guru for the America First Policy Institute. You're both terrific. So, all right, just give me a lay of the land. How do you guys see it? John, start first, and then we're going to go to Michael. I mean, let's sort of round up. We had a lot of news this week on GDP and durable goods and consumer spending. How do you see it, John?
I think the economy is actually doing much better than I had thought it would be. I thought we would take a bigger hit from high gas prices. We didn't. When you see the consumer spending numbers, there's no slowdown. Consumers, I think, saw correctly that the high gas prices were going to be something that was just temporary, and they were going to come down, so they didn't adjust their lives. And then on the business side of things, hiring has been really strong. The core capital investments from the durable goods numbers was very strong. And it's not just, it's not airplanes. Stuff like machinery, primary metals, the computers. These are all, the investment in this is very high, and I think that is a prediction by businesses that we're going to have a lot of growth in the future. And it's a self-fulfilling prediction, because when they are investing in this, it means they're going to use it, which means growth is going to come.
Can you explain to me, Michael, I'm coming to you in a second, but I want to just follow up with John. I am reading from all kinds of economists that the AI boom and the data center boom and, these power centers, it's inflationary. The AI investment boom is inflationary. I see this everywhere, and I don't understand it.
Yeah, it doesn't make sense. It's not. It's actually the opposite. I think this is something you've talked about before, Larry. There are people who see growth as inflationary. They think anything that grows the economy is ultimately, bad for us because it will become inflationary. It's not. First of all, the AI boom is not competing for consumer goods. It's not, it's not buying food. It's not buying bicycles, and it's not buying. It is new investment in new things, and we are producing more of it. It's not inflationary at all. And I don't see the evidence for that in any of the numbers that we've had for for the consumer price index or the personal consumption expenditures price index. It's not causing consumer inflation at all.
Mike Faulkner, why are people so? I mean, it seems like it's a supply side factor. It's a business investment factor. But people are talking about how the AI boom is inflationary. I just don't understand it.
I think what they're talking about is that the construction of data centers, to the extent that takes construction workers away from doing things they otherwise would have, I guess that's the theoretical argument as to why it could be inflationary. But look, we know that because mortgage rates are high right now, there's a pullback in construction spending on the residential side. And so if you have a reallocation from residential construction to data center construction that's not inflationary. And then, as you just said, what it does is it creates the future capacity for productivity improvements that are disinflationary. So we're not seeing contemporaneous pressure on prices coming from this construction, and it should create reductions in price pressure in the future because of the efficiency with which businesses are going to operate as a result of these investments. And then, as John said, the jobs market is looking very strong. If you look at the inflation numbers for the last couple of months, if I recall correctly, the inflation report for May, 60% of it was energy. Well, that's being reversed. The price of gasoline today is, it was $4.10 a month ago, and today it's $3.50 nationwide. So that's a 15% reduction in energy that has not yet shown up in the inflation numbers and should generate, if you have that kind of a significant reduction in energy prices, a 15% reduction, and then you think about the portion of the consumption bundle that is energy, we should be seeing negative inflation prints on a monthly basis between June and July for those reports that are going to come out later. So that's going to take pressure off of these calls for higher interest rates if we start having the monthly read be negative and the 12-month read coming down. And as you yourself have said, if you look at the detrimmed mean on inflation, it's got a two handle on it. So I think the economy, as John said, is very strong. The consumer has been able to withstand these temporarily higher gas prices, I think, because tax refunds were so much larger, and they therefore have not cut back on consumption. So with the resolution of this issue in Iran, with oil prices now being below $70 a barrel, we should, in combination with all the deregulatory and tax changes that the administration has made, have a very strong second half.
John, so let's see. The PCE, personal consumption expenditures deflator, 12-month change is 4.1. Fed's target is 2. Now, the core deflator, which I guess is what the Fed watches or used to watch, 3.4. But as Mike Faulkner, I was fiddling with it on the show last night. The Dallas trimmed mean PCE, so you chop off the high and the low. That's only 2.4. So it's like the old quiz show, the old John Daly quiz show. They used to have this in the 1960s or something. Will the real so-and-so please stand up? Will the real inflation... the Dallas, and Kevin Warsh looks at these things. The Dallas trimmed mean PCE is 2.4. The Fed's target is 2. So what me worry?
Right, and the research that went into why does the Dallas Fed produce this? It's because the trimmed mean is actually a better predictor of where inflation is going. The headline number and even the core number are backwards looking. They tell us where inflation has been. The trimmed mean actually has a better record of looking at what they think of as underlying inflation, and so therefore telling us where it's going to go. And what this number is telling us is, first of all, it has been basically the same since December. So it's 2.4, 2.4. We had a 2.3 month here and there, but we'd like it to come down a little bit more, but 2.4 is actually pretty close to the Fed's 2% target for PCE. And what it really is telling you is that the big headline numbers that we're seeing for 4.1 or 3.4 are not the real story with inflation. You should really look to this trim mean number, and I think I think Kevin Warsh is going, and others on the Fed are going to say, yes, when we start to come out of the Iran war oil shock, inflation is going to come down very rapidly. I think Michael is right that we're going to have some possibility of negative prints for the June and July numbers because gasoline was what pushed it up, and now it's going exactly the opposite way. It is coming down rapidly, and that is going to shift inflation. I do think we'll get either a 0 or into negative on the month-to-month.
Michael,
very shortly.
Michael, you're a hardened government guy. You think the Fed will buy into the trimming stuff? The other people in the Fed. You think Kevin Warsh will be able to sell it?
I do, because I think Kevin, having been a governor before, having just been confirmed by the Senate, and so still somewhat in his honeymoon period, and the way he handled his first press conference, the seriousness with which he's created these task forces to address some of the shortcomings recently of the Fed, I think he's got a lot of credibility. I think that people are going to give him an opportunity to prove himself. And if this is I think as John just discussed, there is credibility, there's statistical and academic credibility behind looking at something like the trimmed mean and giving it some weight because of its forecast power. And I think that will give him credibility in the FOMC meetings to hold off and keep interest rates steady while we see the full resolution of the Iran war. Let me also say one other thing about the underlying strength of the economy that really the president needs credit for, which is because of our finally attaining, after 70 years, energy independence. What that means is that higher gas prices, the money from that stays within our economy rather than being exported abroad. And so rather than high gas prices, while they're a problem for consumers, that money at least gets recirculated in our economy rather than going abroad and profiting our adversaries. So the fundamental shift in energy composition and how much of it comes from domestic sources means that we are not impacted as harmfully when gas prices temporarily rise the way that we used to be.
Well, I hope you're right. We're going to take a break. I'm just going to read this CNBC headline. Trump eases pressure on Fed Chairman Kevin Warsh as inflation tops 4%. But you guys are saying it's not really 4%. I agree with you. I'm with you on this. Anyway, it's yesterday's story. We'll talk about that on the other side of the break. John Carney, co-author of the Breitbart Business Digest Daily Digest. Michael Faulkner is former Deputy Treasury Secretary and the head of AFPI Economics, and that's the America First Policy Institute, where you are indispensable. How about that? We're going to have our big thing in what are we having? The Summit Conference, Wednesday, right, in Washington, D.C.
That's right. Wednesday, we'll have an Econ Summit recognizing 250 years of prosperity and many more years of prosperity to come.
Because you, me, Steve Moore, we got the usual roundup, the usual suspect. We're going to get John Carney. We should find the spot for Carney in the program also. Anyway, I got to take a break here on WABC Radio. I'm Kudlow. We'll be right back.
This is the Larry Kudlow Show.